It's not easy to understand why stocks go up and down, but even in volatile markets, there's always a discoverable and logical reason behind price action. StoryTrading is a social investing community of investors who share information to uncover the hidden stories behind the trade through the 4 pillars of fundamentals, catalyst, sentiment, and technicals. All price action can be understood through the lens of these pillars, allowing for a holistic view that empowers better decision-making. Only by understanding markets can you beat them. Join our community today and start making sense of markets.
And there you have it. That's the inspiration behind StoryTrading. My drive to make sense out of markets and understand markets. I believe it's absolutely possible. I see all of these. I believe all of these prices you're seeing on this screen right now have an identifiable and logical reason behind them. And by pursuing that, you can be in a much better position to make the right investment and trading decisions. In the past, in the early days when I invested, I would see price action, which I didn't understand, and it'd scare me. I'd be like, I don't know what the hell's going on. This is scary. Maybe there's something really bad out there. I better sell. But by understanding what the rest of the market is thinking through crowdsourced collaboration and research, you can figure out why things are happening. And this morning, I think we have some great insights to share on every one of the tickers you're looking at here, which will help to understand price action and inform your decision making. So welcome everyone to the VIP pre-market prep. This is live to our VIP members only at this time. The replay will be available after the market close at 4 p.m. So if you're not a VIP member, make sure to hop on over to storytrading.com and become part of our great community. So Apple earnings. I've been talking about this for a long time and the impact Apple might have on the Qs. I think I've been validated. My concerns have been legitimate, and I've been talking about this for at least 6 weeks. Apple blew out earnings, right? And I always said the Q1 earnings report I think is going to be good because it's too early to see the impact of massive food inflation and the impact of poor sentiment caused by the war and massive food inflation to read through in Q1. So my concern was always guidance for Q2 and for the year. And is that going to be the last shoe to drop that will cause the NASDAQ to make this big, large correction towards the 200-week moving average, right? Which is right now at 261. That's always been my concern. Now, what happened? Apple had a superb report. Initially, it traded up to 170. So why didn't it stay there? Why didn't it go to 175 or 180? Why didn't it break that resistance? Why is it down today? It's down because the very first question by the analyst who came on was what I was talking about. Do you see any softness in consumer spending due to inflation? And Apple didn't have guidance, but Apple refused to answer that question. And instead, they went on and they talked about their bigger concern is supply chain issues, right? Now, that doesn't necessarily mean that consumers aren't being impacted in April because they're saying their bigger concern. They didn't even use the word bigger. They just said the concern that's here right now that we can tell you about is the supply chain issues, and it's going to have, I think they said, a $5 to $10 billion impact in Q2. So that they knew, but they didn't know enough, or for whatever reason, they're withholding on the impact of consumer spending. Now, net, I personally think that's not bad enough to cause like a Black Friday or Black Monday event. If they came out and said, hey, consumers are hit and we're going to sell less iPhones, and we see that data already coming through in April, that would have been terrible guidance. And that would have been a great reason for a Black Friday or Black Monday event. In this case, we don't have that. So I think Apple, you see here, is holding both last night and this morning is holding critical 50-week moving average support. And I think my best guess is we're not going to break below that. I think Apple will hold the line at 50-week moving average support here, and we're going to have to wait until next quarter. And between now and next quarter, I think you're going to see a lot of choppiness. I think you can see short squeezes. I think you can see some downward pressure. Obviously, you see Amazon's down 10%, so there's a lot more that goes into the NASDAQ than just Apple. So let's talk a little bit about Amazon. See, it's a huge hit, and this one did take you all the way to look at that. It wants to test the key 200-week moving average. So honestly, why is Amazon down so big? I actually think this report is not terrible. The reason it's down so big is because the headline numbers missed, right? So this shows you how dangerous it is if Apple comes out next quarter and because of weakening consumer demand, if they have a miss, you can see what the hell would happen to market. So this is a reaction to headline numbers on Amazon, and their problems are mostly costs on the cost side. I was never concerned about consumer spending on Amazon because Amazon sells a whole wide range of products. A lot of them are not discretionary. A lot of them are products you need, and a lot of them are products that the cost is being passed on to customers. So that's why I never brought Amazon up in terms of, wow, they're going to have a huge revenue miss or a huge problem in terms of consumer demand. They are having a problem now in terms of the costs and gas and warehouse expenses and things like that, and that's why it's down. But here too, I think it's going to hold the 200-week moving average, my best guess. And so that's what we're looking at. So I don't fear currently like a Black Friday event today or a Black Monday event on Monday. And I think what we're going to see is choppiness, possibility of short squeezes, because you do have a lot of puts that have to be unwound, which will force the market makers to buy stock. So chop, right? This is the bear market. You can have chop, you can have some bear market squeezes. And that's my analysis for Apple, Amazon, and NASDAQ. Now, look at all this green here. Why do we have that? Lots of great explanations. Let's look at Tesla. Look at this big drop in Tesla just a few days ago, and everyone is screaming, "Oh my God, it's a conspiracy!" You got like the world trying to knock down Tesla's stock so Elon will lose his wealth and he won't be able to buy Twitter. Well, what we found out last night was this was caused by Elon Musk. In the morning, he was killing the stock. Boom! I mean, he sold like $5 billion worth of stock, like 900. So that must have happened pretty much in the morning. And he tweeted last night that after today, there's no more planned sales. After today being Thursday, so that insinuates that he did sell on Wednesday and Thursday as well. And we'll see those Form 4s coming out, I guess, today, over the weekend, Monday. I don't know the reporting requirements, how quickly they come out, but I think it seems to take about 2 days. So now people understand why Tesla sold off. The uncertainty is gone. The mystery is gone. So you're going to see a bounce in Tesla today. I said this last night, and lo and behold, there's your bounce. I can't tell you how far it's going to bounce, but now we understand the pre-market action. And last night, I also told you guys Twitter is going to be up. Why is Twitter going to be up? Because Bloomberg only had a 33% chance of the deal being closed on their Bloomberg terminal platform. I don't have access to it, but I saw screenshots people are sharing on Twitter. So I imagine that 33% will be increased somewhat today because obviously, why did Elon sell? He sold to raise capital to help with the Twitter purchase. So that's why you see Twitter up today. Although in the 5-day chart, it doesn't look so impressive. It doesn't even look like it's up, but it's up 0.5%. It's right here because it dove at the close and it's just taking that back. But now, at least qualitatively speaking, we can understand why Twitter and Tesla are up. I'm excited about that because I do have a few more shares of Twitter, which are uncovered because I'm actually selling covered calls on my entire Twitter position, weekly covered calls. Earlier this week, I took an opportunity to buy back some at what I thought was a low. I wanted to sell them back higher. Ended up not being a low, so I ending up with 500 Twitter shares that are uncovered right now. So hopefully we'll have a nice little surge in the morning so I can sell next week's 50 or 51 or 52 strikes and continue doing what I've been doing, selling weekly covered calls on Twitter ever since the announcement was made. And I'm doing that because the upside's 54. It's defined, right? It's not like I'm missing out on anything if the stock goes, much higher than the target price plus my premium. Might as well collect premium every week, especially since this is lasting 6 months. This could end up being an ATM for me. Selling Twitter covered calls every week. Let's hope. All right, let's move on down to Clearfield. We had an excellent presentation yesterday by someone in our community, and he forecasted. His name, I brain freeze right now, but it's on our Twitter feed. The name of who did that presentation, but we had a presentation yesterday by someone in our community on Clearfield. He predicted great earnings, blowout earnings. He was right. It was up and after hours. It's up this morning. So congratulations, Chris Tarbert, I think it was. Yeah, Chris Tarbert. So that's Clearfield. We had the CEO speak before. So great, solid company, telecommunication space. So that's why Clearfield is up this morning as they beat both top and bottom line expectations on the street. Let's keep looking. Why is DWAC up 11%? This is interesting. Well, it's because Trump made his first tweet um, last night as he hit 2 million followers, and that tweet has gotten a lot of engagement. So listen, this threw me for a loop. I was wrong on this. This is why, I mean, it's why I don't touch DWAC at all. I don't buy it, I don't short it, but I monitor it because of its impact on CFVI. But I got this wrong. I thought DWAC was going to go to like 10 basically after Elon was taken over, right? You saw it was heading there. It was like at 70 when Elon made the announcement. It got cut in half, and now it's making a comeback. And I guess I miscalculated Trump's resolve. I guess he was out there earlier in the week saying, "I'm not going to go back on Twitter, even if I'm allowed back on." And then they fast tracked getting onto the Rumble cloud and opening up their wait list. So they're obviously this competitive pressure is causing him to act, and now his posting on DWAC. So qualitatively speaking, sentiment-wise, DWAC has life. Obviously, it's still very overvalued, but at least you can understand. And let me tell you personally, even though I'm excited about Elon and free speech and a lot of conservatives coming back to Twitter, I was like, well, why? There's no need for Truth Social anymore because the whole idea was free speech. Well, I guess I was wrong. The whole idea is not free speech. People do want to hear what Trump has to say. And even I'm like, I want to hear what Trump has to say. And I was thinking about it. You know what? I bet you CNN is going to report what Trump is going to be saying on Truth Social. So there is a business there. One man can make a business. There's going to be a social media site, at least for now, just for people to see what Trump is going to say. How big is that business? I don't know. I don't think fundamentally, I'm not buying the stock, but you can understand the sentiment. You can understand the buying this morning. You can understand why there could be a short squeeze. And because it's so dangerous, I'm staying completely out of it. And of course, DWAC takes CFVI up with it because DWAC is powered by the Rumble cloud. Okay, so that's the price action there on DWAC and CFVI. I want to bring up a few more stocks here. TeleDoc, we spoke about extensively. I don't know if I did a recording on it here, but in our community, we spoke about it because this huge earnings miss happened 15 minutes after our private call with DRIO CEO Erez Raphael ended, right? So we got some great insights from DRIO on the digital health space and some of the trends they're seeing, at least for them, which was very positive in terms of advertising spend and in terms of insurers and employer signing, all very positive stuff, reiterating all their guidance. And then 15 minutes later, you have TDOC saying insurers don't want to sign anyone up and we can't get employers. And so it's very interesting. DRIO was out in full force, emailing out a note to myself and to all the analysts that covered DRIO, talking about their interpretation of TeleDoc earnings. And basically, they think they're taking share from them. And there's some competitive pressure. Now, mind you, 75% of TeleDoc's business is telehealth. So I'm talking about the chronic digital health management part. So there's a difference there. But DRIO feels they're doing very well. And they're taking some business from them. This morning, there was an analyst note out. So I predicted yesterday, because DRIO's out there talking to all the analysts, I said, we're going to see analysts coming out and defending the stock today. And we're ready. We have that. We have an analyst out this morning with reiterating a buy with their own interpretation of TeleDoc and DRIO, and with a $31 price target. And DRIO's at $5. When was the last time you saw that, guys? $5. They're saying this is a six-bagger in a year, is what this analyst is saying, and I assume there may be others out already. There's like 7 analysts covering this, and as of yesterday evening, Erez told me he already had phone calls with 4 of them. So we could have another 3 reports coming out reiterating buys on DRIO. So I'm very excited about DRIO. I think on the other side of this is a possibility DRIO could end up being the favored growth stock in the digital health space if they execute. Okay. Based on everything Erez is saying and is promising, it looks great. So either he has it completely wrong or is lying to us. We're going to find out in the coming quarters. Okay. Starting with the report that's coming in just a few weeks. So things look good. I bought DRIO. I bought more DRIO yesterday at 469. Yahoo! Oh, I hope that was the bottom. It's fun when he catches the bottom. But 469 to 473. I bought a few thousand shares to add to my position, and let's see. All right, so I feel real good about DRIO. ACTG was a VIP pick that was introduced by Matt Kolb a couple weeks ago, and it had a great chart, but he talked about the buyback program they have and how undervalued it is compared to their net asset value. And I noted yesterday morning in the chat the relative strength of ACTG in the morning when markets were down, and look what happened in the afternoon. So I do think this is probably related. Well, you both have the technical support here at the 20 DMA. It was holding up really well after this pop after the earnings. But I guess we saw some inside company buyback with very big numbers on the bid, preventing the stock from going down. People saw that, and the stock went up in the afternoon when the NASDAQ went up. So that's the story on ACTG. BTU was a stock we were following because Arch, another call company, just blew it out of the water, 126 to 169. We thought, okay, BTU has earnings a couple of days later. Ended up being a disappointment because of their trading activities, their hedging activities, which didn't work out well for now on call trading. So they took a hit. So this is what I did. This is how I'm playing it, because I guess my price is somewhere up here in the 25 to 26 range. The stock had a little bit of rebound here after the conference call. So I guess the conference call was okay. I sold $26 calls for like $1.50. So that's great, right? I still make a nice little profit if it does hit the strike price. And if it doesn't, I lower my cost basis by $1.50, and I'll rinse and repeat, sell more covered calls next month. Outlook, I think, is decent based on Polo's analysis that he provided the room. So I'm not in a hurry to sell this and take a loss. I'm happy on BTU. All right. On Sunday night, the full agenda is yet to be determined for our weekly meetup, but I will be providing an update on SEAC. I spoke to SEAC Investor Relations for quite a bit of time yesterday. I gave an update in the rooms for those who are paying attention, but I know a lot of you can only tune in once a week. So I'm going to be giving an in-depth update on the SEAC merger with Triller, the status of that, the risks associated with that, the next steps, how to play it. We'll talk about SEAC on Sunday. KODK, we're continuing to monitor. There's great nuggets coming out every day on their job postings. There's another great job posting I posted in the room and on social media last night. But for now, KODK is trading with the NASDAQ. Very clear correlation. So I'm not sure we break that correlation until a company-specific news happens. Earnings is coming in about 3 weeks, so we'll see if anything happens with that. I was wrong on ARTW. For now, I'm trying to get out of it. We'll see. Maybe I'll get lucky and it'll be a pop, but I don't think there's too much downside. You see here, it bounced off the 200-week moving average support, or is that 200-day? That's 200-week moving average support. So I'm not in a hurry to sell that. I'm going to look to sell someone's strength. Your upside is about 370 in case it does attract some traders or there's some news. So, all right. So that did not get the immediate pop I wanted. And that's the update for the day, guys. Isn't it great understanding markets? Having a great time. All right. Let's talk in the community, guys. Thank you.